Bluford Putnam joins me now. Bluford, you're very welcome to The Last Word.
Thank you.
So from one trader down on the floor to the man who sits up there above them, is the recovery in the US, would you describe it as self-sustaining at this stage?
Oh, absolutely. I mean, the recovery really started last year and more in earnest as the consumer finally finished deleveraging from their shock. Right. And corporations finally started spending. I mean, their profits recovered in 2010, but they didn't spend in 2011 because it was a little weird, thanks to Europe, of course. So it's much better now.
Do you think the housing market has bottomed out? Because that's the real linchpin to the American recovery, isn't it?
I wouldn't call it a linchpin. The housing market's going to be the last to know. Normally, housing leads us out of a recovery, but housing was the problem. It was the epicenter. And so the housing is going to be the last item out this time. But to answer your question, it has, in fact, hit a bottom. It's just how fast is it going to come off that low base?
I mean, we just heard from one of the guys on the floor there, and he's talking about the debate on where rates go. And there is a great deal of debate as to whether Bernanke and the Fed are still married to those low rates. What's your view? Do you think they're going to stick with their pledge, or might they have to pull up early?
Well, the Fed gives guidance, not commitments, if you know.
It's a very, very important difference, isn't it?
It's certainly an important difference. But the Fed also has an asymmetric view of their own risk. The Fed would much rather avoid a double-dip recession than take a little bit of risk that inflation might rise a little bit. So the Fed is appropriately cautious. Now, does that mean that they're going to stick to the 2014 guidance? Well, if we have a 3.5% GNP year and unemployment is moving into the 7% range and declining, the Fed in 2013 may very well consider changing their guidance, and they will not consider it a mistake. They will consider it that they did the right thing. They're very pleased with themselves, as they well should be, and they will be happy to change their guidance because it means things are going well.
Well, with that in mind, do you think we're going to get another significant quantitative easing? Do you think we need another round of QE in the States?
I don't know what to do with the word need, but I don't think we're going to get another round of QE. The economy is doing much better. You can argue about whether there's a head fake in the employment data or whether the housing has really hit bottom, but there's no question that the economy is stronger now than it was in 2011, than it was in 2010. And the Fed has to monitor that. But this idea of another round of quantitative easing, I think it's a total non-starter in 2012.
Tell me this, you look at a lot of numbers. What's the benchmark for you? What's the number for you, or a couple of numbers that you base your recovery view on?
You know, the interesting thing about that is I don't do numbers. Because if you look at numbers, you're always the last to know. What you have to do is analyze, why was the recession as deep as it was? Well, it was a financial shock that caused deleveraging. So for me, all I had to know was the deleveraging was over, and I was ready to take a bullish forecast, and that occurred middle of last year. So, you know, the numbers then come through and either confirm or not. But a confirming, if you're looking for confirmation, you know, then that's one thing. But if you're actually looking for evidence, you're going to be the last to know, and you're going to forecast the recent past, and that's not all that useful.
That's not that great. We're here in Europe, so let's cross the pond. G20 effectively told Europe, put your house in order, raise your firewalls. Do you think that Europe has done enough?
I think Europe has done quite a lot. And in fact, as I look forward, I'm a little concerned that the leadership of Europe has done more than the voters and the electorate might approve. And so as we go through an election cycle here, France in April, perhaps Greece in May, the Irish get to vote on the European Stability Compact in June, the Italians in September, we're going to finally hear from the voters. And I think they might have...
They're a hard crowd to please.
They are a hard crowd to please, and they may cause just a little more volatility. But again, it's all in the fact of working out the long-run problems.
And here we've had the European Central Bank put about €1 trillion into our banking system. If they pulled back, as has been hinted, you've had your trillion, we're going to pause. Right. Do you think we run the risk of another liquidity crisis here in Europe in the banking system?
No, I think €1 trillion at 1% for 3 years is quite sufficient to take the liquidity crisis off the table. They don't need another round. And in fact, the amount of money that the European banks put back to the ECB and various places in liquidity is telling you that they are very liquid, that problem has been taken off the table. And then the ECB says, well, I'm not going to lend to governments, so I bought you time. Now you go solve that problem, but it's no longer a crisis, it's a problem.
So we're going from crisis to problem.
Absolutely.
Does this money money really going to make it into the real economy?
No, because the banks...
You're not giving me much. You're really not giving me much cheer. Go on.
No, well, the banks have to raise capital, and the liquidity buys them time. So will it make it into the real economy? Actually, it will, but not this year. It'll take a while.
You sit up with a bird's eye view up there at the CME. I've got to ask you, the classic argument, do you advocate open outcry, you're at the last bastion of it, or do you believe in the power of electronic trading?
Well, it's the information world. I study volatility in markets, among the things I study. And I've been doing a research project with a number of folks from the academic institutions on the transition from pit trading to electronic and so forth. And it's very interesting that even though electronic trading has taken over, the pit has a role to play in the price discovery process. And,
there's going to always be, there's always going to be room for a voice.
But you better have your electronic systems right, too.
Bluford, thanks for your time.